Crypto as a whole is green today, but one token tends to outperform, and that is MYX Finance. This rally isn't just happening today. The entire month MYX performed massively. The question is, how much longer can this rally last, and what's actually driving all of this price appreciation? Let's have a look at the on-chain data, the data most people are not considering. So here's the performance today, but have a look at what we see this month. More than a 10x in MYX Finance. Is there maybe another 10x to come in the next month? Now let's step back first. Let's have a look at what MYX Finance in the first place actually is. It's a decentralized finance perpetual futures exchange. So it's a platform in DeFi to bet on cryptocurrencies without actually buying spot the crypto assets. Instead, we're just betting on the price with leverage. And we can bet on either direction. We can go long or we can go short. And for Bitcoin, we can do this with a leverage of up to 50x. Perpetual futures trading in decentralized finance is a growing market. This is the trading volume in the last 24 hours, 26 billion. And 1 year ago, we tended to be only at around 5 billion. Now, the problem with this chart is that even though the sector is currently growing, that's mainly because of one player. And that player is not MYX. MYX is mainly active on the Binance Smart Chain. On the Binance Smart Chain, we only saw 500 million worth of trading volume in the last 24 hours. Really, what's causing all of that growth is hyperliquid. So that's here the area in yellow. If we remove hyperliquid from this perpetual futures trading overview, then there isn't really that much growth in the sector. We just see a wave pattern. We used to have similar trading volume at the beginning of 2024 as well. Have a look at the fees that get generated on MYX Finance. Yes, it went up in the last few days. But just have a look at the magnitude of those fees. It's just a few hundred, maybe a few $1,000s per day. Here's the revenue of the protocol, a very similar magnitude. And while the total value locked and the staking numbers measured in US dollars are going up, I think a lot of this is just due to the MYX price itself going up. So this is not more usage of the platform. So it looks like a decoupling here happened. The price of MYX Finance is not connected at all with the usage of the platform. There's a massive disconnect, and yes, the platform is active, there is something, but that something is definitely not worth the current market valuation. But what's then actually driving the price, and where might it go from here? We have seen a very similar move at the beginning of August, and we talked about it at the time, how the price rallied, and at some point we might see a turnaround, which we then did see at this third arrow. And it seems like history could repeat itself again. Just have a look at how well those curves converge. Most trading volume of MYX Finance is actually not happening on the spot market. It is happening on the perpetual futures market, not directly on MYX, but on other platforms. In the last 24 hours, we saw $233 million worth of trading volume on the spot market on BTCC. Compare this with the perpetual futures market. Here we had close to 2 billion worth of trading volume, and that was on Binance. It was not on MYX. And so here's what's going on. As the price is rallying, more and more people see the disconnect between the fundamentals and the price. And more people want to bet on falling prices. Now, as there's more and more people betting on those falling prices, it costs money to do that. So there's financing fees. Those financing fees turn very negative. So every 8 hours at the peak, the shorts had to pay the longs roughly 2% just to continue betting on falling prices. And that, of course, incentivizes the market makers to buy the token because of two reasons. Because first of all, the funding rates can be earned. But secondly, purchasers on the spot market will also squeeze out those shorts and bring back a balance to the market. And currently, again, we have very high negative open interest weighted funding costs. The trading volume on the perpetual futures comes in waves as well, and with the current recovery of MYX, this is also going up. The shorts are getting liquidated one more time, and the open interest isn't rising as quickly anymore as the price because of the liquidation. So whenever open interest goes down, then the spot price tends to go down as well. Whenever open interest goes up, so the amount of bets on the price, when that goes up, then the spot price tends to appreciate as well. So really what we're seeing here is a classical short squeeze. The exact opposite setup compared to what we had with GameStop back in the days. With GameStop, we saw the hedge funds, the big guys, betting on falling prices. And then the masses, so the Reddit community, saw all of that short interest and bought up the stock. With the purchasers, the price went up, and with that, the hedge funds got liquidated. Here now with MYX Finance, we see the exact opposite happening, as in the masses are betting on falling prices and the market makers are buying up the token on the spot market, short squeezing the masses, basically taking away any profit from the masses. It's clear that the valuation of MYX Finance is not sustainable, and at some point the price has to come down. But sometimes the market can be irrational for longer than we can stay liquid. The market cap of MYX Finance is now at more than $3 billion, and we have seen the revenue of around $1,000 per day, right? This is in no relation whatsoever. But that then poses the question, are we going to see another short squeeze again? This was a 2000% rally, this over here as well. Is there a chance that after an initial bleeding of the price, we see again another 2000% increase? I highly doubt it, because with roughly 20x from the current market cap, we'd be at around $60 billion. This would be 4 times larger than Chainlink. This is not going to happen. So you will at some point see the price deflate again and come back to reality. It is extremely unlikely that we're going to see another massive short squeeze again where the price reaches $300 or so. MYX Finance is not going to be worth more than Chainlink. At some point, it's not profitable anymore to short squeeze the asset beyond a certain market cap. Very often, short squeezed assets tend to turn around somewhere between $2 billion and $6 billion of market cap. We're pretty much at that point now. Could we see another 2x? Yes, it's possible. Are we going to see another 3x? Unlikely. 4x, even more unlikely. Now here's the problem with investing in this market. There's in general 2 major forces that impact the prices. On the one hand, we've got the macro environment. Where is Bitcoin, Ethereum and Solana going? Then on the other hand, we've got whatever happens idiosyncratically to a specific altcoin. Now the problem is most people can't make constant gains because most people aren't really segregating among those 2 influences. So if you're just riding the macro environment, you can just go with Bitcoin, right? You can buy whenever the current price is below the realized price. Whenever we are below the average cost basis of the market is historically the best time to buy. Of course, currently we are very far away from that. But in general, approaches like this work quite well to time the macro. Or we can even go a bit more complex. We can use things like the CBBI indicator, an indicator that aggregates all kinds of other models. And it also shows us pretty well when we are potentially expensive or potentially cheap in the market. The reason why those indicators are great for macro timing is because it tells us how much we should potentially be invested in crypto. We should have very high allocation over here, maybe 30, 40, potentially even 50% of our entire net worth in crypto. And we should have the exact opposite when we are up here, right? Maybe only 5 to 10% of our net worth in crypto. So we can always adjust based on models like this, and we can play the macro. And for the macro, we can just go with Bitcoin because Bitcoin tends to outperform most altcoins most of the time. So that's one approach to make money in crypto long term. And I think that's the most straightforward, easiest approach for people that just start out with everything. But then there's also the approach of higher risk, higher reward, of using the altcoins. But this is now the Bitcoin price that we see at the top. What we now see at the bottom, that's the altcoin market cap. And just have a look at how similar those lines look. When Bitcoin is going down, the altcoins go with it. So even if you take the best altcoin on the market, even if you figure out that the fundamentals of project A, B, and C are the best and that they are doing long-term better than the rest, if Bitcoin goes down, if Ethereum goes down, then the best altcoins go down with it. And that's the problem. There are times when everything is going up and there are times when most things come down. And it seems like the asset selection doesn't matter as much compared to timing the macro environment. But then again, we are back to just trading Bitcoin. If you want to just get macro exposure, we just might as well buy Bitcoin, buy and sell Bitcoin. So really, we want to find a way to bet on an altcoin without the macro environment. We want to neutralize the macro environment, and we just want to bet on the outperformance or the underperformance of a certain altcoin. I'd make the argument that it's actually easier to bet on the underperformance of an altcoin. Because have a look at the altcoins in the last year. Bitcoin, of course, in the last year almost doubled, and the vast majority of altcoins underperformed that, right? We've got 1, 2, 3 altcoins that did similar to Bitcoin, maybe a bit better, but the vast majority did worse than Bitcoin in the last year. And for some altcoins, that happens rather consistently. This is Balancer relative to the others market cap. So how is the Balancer token, a decentralized finance protocol token, doing relative to all other cryptocurrencies? And it's going down consistently. Now, the reason why this is going down is fundamentally driven, as in there's more and more tokens that hit the market over time. There's a high token inflation, or the tokenomics are not that good. Here is the Balancer tokenomics over time. We started out with 20 million tokens, and now that went up all the way to 70 million tokens. And that then has this long-term underperformance as a consequence. And so I like to take advantage of market inefficiencies like this. I like to bet on falling prices of Balancer relative to, for example, Bitcoin. Because then we can turn around this chart. This chart turns into this chart here. This is now Bitcoin relative to Balancer. So we bet on rising prices of Bitcoin and on falling prices of Balancer at the same time. And we get this return curve over the years. So in the last 12 months, this went up by 186%. It actually did outperform buying and holding Bitcoin. And that's better than any straight altcoin pick over here, right? Among the small risky alts. None of them did that performance in the last year. And I also like how constant that performance is. Compare this with the Bitcoin price, right? Bitcoin during that time did go down by 77% at one point, right? The drop from 70K all the way to 16K. This relative ratio did not have those fluctuations. Here is the logarithmic scale, and the maximum drop from top to bottom was 50%. So we are appreciating faster than buying and holding Bitcoin, and we do this with less fluctuation over time. It's a better risk to reward. That's what we all should be aiming for. More return with less volatility. I'm following this kind of strategy already for 4 years roughly. Had I just dollar cost average into Bitcoin, I would have gotten the return indicated by the gray line. But because I also bet on relative valuations, on things like Balancer going down over time, I got the return indicated here as the black line. I understand it's not as straightforward as just buying an altcoin. There's a bit more complexity to it, but that's why I created dedicated videos on this. And I want to make this as easy as possible. So here's the idea. You simply watch 2 videos over here that explains the entire strategy, how to execute a relative valuation trade. Once you've watched those 2 videos, I will send you my favorite trade. So that favorite trade is very similar to the Balancer token trade. It's going long Bitcoin, Ethereum or Solana, and it's going short the altcoin that tends to go down over time. Here are the 2 videos. It's using perpetual futures to bet on relative valuations, and it's risk management with relative valuation bets. In total, it's roughly 1 hour worth of content. So just watch those 2 videos, and afterwards, after you've joined the community, I will send you my favorite trade that performs very similarly to this chart here. And so here's the offer. If you do not make any money with that trade after holding it for only 1 month, then I will refund you the membership fee, no questions asked. So simply just send me a message. I will just refund you the $125 per month. If you do make money, of course, with that trade, then feel free to just continue copy trading me. Because I will not just share this one trade, I will of course share every trade that I do myself as well. A link to Premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in Premium. Cheers.